among all of that, one of the stocks which is on our radar is UCO Bank. They reported a strong performance in the third quarter, marked by a near 27% jump in net profit, led by 17% plus loan growth as well. Ashwani Kumar, who's the MD and CEO of UCO Bank, joins in to discuss the latest earnings release and the outlook ahead. Thanks a lot, Mr. Kumar, for joining in. Remember speaking to you just a couple of weeks ago when you did speak about, the timeline for the QIP, and you did say that in the third quarter, when the numbers come by, you will be surprised because they are largely in the guided band itself of close to 12 to 14% loan growth, NIMs between 3.8 to 3.9% as well. But among all of those data points, what you've actually done is you've beat your loan growth estimate. Close to around 17% is what the loans have grown at. Even the NIMs, which have been above the guided band of 2.9 to 3% as well. So the question is on loan growth and NIMs, what is your target for this year? And if you can hazard a target, an aspiration for the next year as well.
Thank you for having me on the show. As you can see that our guidance for the loan growth was around 12 to 14%. We have already clocked in last 3 quarters above 14%. And in the fourth quarter also, we expect the same trend to continue. But within the overall guidance, we may exceed loan growth guidance in the fourth quarter as well for the year whole as well. On NIM, we have given a guidance of 2.9 to 3, and then we revised to 3 to 3.10, and we have surpassed that guidance also, 3.17. This is done by containing the cost of funds and also improving yield on advances. You can see that our yield on advances and cost of funds is much contained over a period of time. Next year, we expect the loan growth to be around again 12 to 14%. That will be our internal target, and we'll try to surpass our targets or the guidance which we give. And NIM, because of the upcoming rate cut cycle anytime next year, next quarter or thereafter, we expect some impact on the NIMs. But our intent will continue to be maintaining the NIM in 3 to 3.10 in the next year also.
Sorry, can you repeat the NIM number once again? To 3 to 3.10 is what you're looking at, irrespective of what the rate cycle says, right?
Yeah, currently our NIM is 3.17. So there is a possibility of rate cut also.
Right.
So our intention will be to maintain our NIM in the range of 3 to 3.10.
All right. Hi, sir. Good morning and good to see you. And yet again, give us some color on asset quality, which seems to have improved. Slippages are down. Gross NPAs have cooled off. Net NPAs as well have cooled off. So on these 3 numbers, what is the guidance going ahead?
See, we have been improving our gross NPA and net NPA on a quarter-on-quarter basis. Our guidance was less than 3. We have already achieved 2.91. And net NPA guidance was 0.65. We have already achieved 0.63. And our target will be to further reduce our gross NPA in this quarter and next year also. We intend to reach to 2.5 our gross NPA in the next year and less than 0.5 net NPA in the next year.
All right, so less than 0.5 net NPA in the next year with 2 to 2.5% gross NPA, 3 to 3.1% NIMs, and 12 to 14% loan growth. We've got all those details from you. Also on the CD ratio, your target was 75%. You've come closer to 72%. So what's your deposit mobilization strategy from here on?
If you look at our deposit growth in the last 2 quarters, last quarter our deposit growth was more than 10.5, around 10.5, and this quarter, in December quarter, is 9.36. So the momentum has picked up in the deposit front from the last quarter, September and December. The momentum will continue. We have made our resources team at zonal level. They are doing the Customer Connect program has been launched. Our staff is reaching out to the customers for garnering fresh deposits and also for the quality customer acquisition. We have launched tap banking. We are reaching out to the customer for opening salary accounts. We have tied up with some of the institutes also for opening of salary accounts. So the focus on fixed deposit or the resources will continue in the next year, as we have already now reached almost 75% of CD ratio, which we were targeting it at the start of the year.
So what is your current CASA and what do you intend to take it to with this mobilization strategy?
See, current CASA guidance was 37 to 38%, and at the start of the year also we were at the same, we have not dipped in the CASA. And our intention will be that at least to maintain this CASA ratio, because currently, as you know, the CASA is getting, people are moving from saver to investor, and a lot of money is moving to the mutual funds. As a result, CASA is getting converted to the bulk deposits. So our target will be that we should not dip below 37-38%. We should maintain our CASA ratio to 37 to 38%.
And final question before we let you go on QIP. When does that happen?
Anytime after these results. Now we'll be going for the road shows, and then we'll be launching QIP.
In this financial year or the next one?
Yes, this quarter.
Okay. Thank you so much for joining in and giving us all those details from a loan growth and business growth standpoint, but more importantly, in this quarter as well, there would be a QIP which may come by as well. That's UCO Bank.